Hi, this is Lou Elson. I'm here today with John Schneider, living a Midwest life and real estate investor in Dane County for over 20 years. John's going to help answer some questions that we get a lot on 1031 exchanges, kind of what they are, how they work, and we hope you enjoy. So John, are you ready for the fire?
Let's go. Thanks for having me, Lou.
Yeah, thanks for coming. Can you explain what a 1031 exchange is in simple terms and why investors would use it?
So in the simplest terms, a 1031 exchange is a way to defer the capital gains tax that you would have while selling one property in exchange for another property.
Gotcha.
So what ends up happening is you have one asset that let's just say you purchased it for $100,000. Now it's worth $500,000. You sell that property for $500,000. You purchase another property for equal or more value than the $500,000. You defer all of the capital gains tax that you would have in exchange for the new property, and you start over a new depreciation schedule. So it allows a lot of great tax advantages when you make the sale of one asset and exchange it for a higher asset class property.
Gotcha. And what are some of the biggest mistakes you would say people make when doing a 1031 exchange?
The number one mistake that people make is not identifying the property that they're going to purchase before they sell the other property and missing the timelines that are required when making the exchange and getting those specific timelines set up so that you can make the exchange without the taxation issue is really what you need to do.
Gotcha. And how can real estate investors use their home equity to grow their portfolio? Tips on that?
Well, there's a couple of ways you can do it. And your own personal home equity, that's one thing. And you can draw out a line of credit and use that as a down payment on a house if you're buying real estate assets. And people do that quite frequently. It's probably one of the best uses of your home equity. You get a real great interest rate on the new acquisition. You're able to buy more property. There is some inherent risk that comes with that because obviously you're leveraging your primary residence, the home you live in, to buy an investment asset that could be have some real risk to it. So you need to make sure that you're doing the right thing for you and your family when you're taking out an equity line on your primary residence. But you can do that on investment properties too. So if you own an investment property, you purchased the investment property years ago, you can use that equity in that property. You can pull the equity out or a portion of that equity out and use that capital to buy another property.
I love it. Yeah, and when would you say it makes sense to refinance versus use a 1031 exchange?
It really depends on your particular situation, but I would say a 1031 exchange is most valuable when you have no depreciation left on the property that you are currently an owner of, and you can trade into or buy into another asset that's going to increase your value of the property that you can depreciate. So if you bought a property for $100,000, it's now worth $500,000. If you didn't depreciate the $100,000 already, you'd have $500,000 of depreciation you could take advantage of when you buy the new property. And that depreciation is a massive tax advantage for us. I would say, the tax laws were kind of written by landowners long ago. And so owning property is a great way for you to defer taxes for quite some time. And there's great tax advantages for that. So that's usually why you're not going to refinance versus what I'm going ahead and giving a sale.
And just a real simple, if you don't mind, John, I'm going off cue here. Just a basic explanation of what depreciation is. How would you explain that?
So depreciation is an interesting value add that you get on real estate that many other business investments do not have. And I'll use a car, for example, because people have done this with a car. A lot of people have heard of you buy a truck and you're able to write off the value of that entire truck if it's big enough in 1 year. So you buy a $50,000 truck, and that truck is a qualified weight class that allows you to write that $50,000 off against your income in 1 year. Essentially, that's what depreciation is for real estate. Every year you're writing off a portion of what that asset's value was, and that portion comes off of the income that you would generate. So real quick, let's say you bought a $100,000 property, and this is not exactly the schedule, but it'll just for example, let's just say you were able to depreciate $10,000 of that property in 1 year, and you brought $10,000 of income in on that property in that same year. Your taxable revenue on that at the end of the year would be zero.
Zero. Yep. Yeah. Gotcha. That's very helpful. Thank you.
You're welcome. Yeah.
Last question, John, is what's one piece of advice you'd give to someone that's just getting into real estate investing or new to it?
I got to almost give you two.
Can't wait. Let's go.
The first one is buy something. Buy your first piece of real estate.
Anything.
Yep. And if you're really looking to invest, you got to just kind of, put on the fighting gloves and get in the ring.
Yeah.
And that's really what it is. And it's a challenge. And the other piece of advice, if you think you're going to buy real estate and you want to buy one property to invest in, don't do it. This is a game that is built for people who do multiple transactions.
Yep.
If you're really thinking that you want to invest in real estate, ultimately you want to have more than one property. So thinking that it's going to be a challenge through the first one, get your fighting gloves on, get in the ring. That's what you need to do for your first one. And also realize that your goal has got to be much greater than one to really have long-term financial success in real estate.
Awesome. Well, I really appreciate you coming today, John. Is there any last minute things you want to add?
No, I think that's it. I look forward to doing something like this with you again. It's been a pleasure working with you and look forward to doing more of it. So
thank you, John.
Thank you.
Thank you, everybody, for joining us and listening about 1031 exchanges. Thanks to John from Living a Midwest Life. And I'm Lou from Lou Elson Real Estate, and we look forward to seeing you next time.